Welcome back everyone. This is a brief update about the gold market. Gold's price managed to break out the sideways motion it was trading within for the past week and yesterday jumped to new weekly high. Gold's recent activity sent the indirect message that the shiny metal could be in for a comeback if circumstances allow for such a scenario to materialize. Yet March has been the most active month for gold so far in 2020, and gold traders are still enjoying the metal's increased volatility and unpredictable nature as more opportunities arise. This report aims to briefly overview the most important drivers for gold's price and provide some useful ideas for traders to consider if they are to engage trading. First, we would like to emphasize many reports warning that the global economy is in a challenging and very difficult situation for the time being. Many countries, including the US, Australia, major European countries like Germany, France, and Italy, also adding the UK, have placed restrictions on social interactions, which are expected to reduce economic activity and production of the pre-mentioned economies. As we are going through the end of the first quarter of the current year and problems from the coronavirus outbreak are just being dealt with in some major countries, analysts expect the negative impact to be most possibly transferred to the second quarter. As these countries are more than enough aware that the negative economic impact from the lockdowns imposed could hurt employment levels, production, and services performance, they are attempting to ease this effect with stimulus. Most impressive action was taken by the US Fed, which announced its decision to enact an endless quantitative easing program. The Fed announced an unlimited quantitative easing program and plans to support credit markets in the amounts needed, all in a drastic move. The measures include purchases of corporate bonds, guarantees for direct loans to companies, and a plan to get credit to small and medium-sized business, as Reuters noted. The USD eased a bit against the basket of other currencies yesterday, and especially during today's Asian session, yet remained at rather high levels. Furthermore, the so-called helicopter money could be a significant relief for an economy like the US at the moment. But what if the action could only have a temporary impact? Some analysts view the extreme measures as a test for the US economy. So another question at this point could be how much debt can the US government take on? What effect does this move have on gold in the long run? In our opinion, the news is bullish for gold, but certainly not for the short term. However, gold moved steadily higher in the US session yesterday, as it seems that the weakening demand for US dollar coming from the pre-mentioned news gave a reason for gold bulls to move into the market, but in a rather slow and persistent manner. The effect could be continued today, even though the precious metal has already gained a lot of ground in the past 2 days, so a correction may be inevitable. Since yesterday, gold has moved from 1482 and reached 1600 today in the European lunchtime, which is an approximate $118 gain. As a closure, we believe that the bulls could overtake the gold market and could be aiming to push the metal to 1700. In any case, the precious metal once again provides more interest than any other trading instrument. Moving now to the technical analysis and goals for our chart. Today, gold briefly reached the 1600 US dollars, but quickly retraced lower. Our first levels to the upside are the R1 1634.10, last seen on the 12th of March when the first stimulus action by the US was announced. Higher we have noted the R2 1663 level and the R3 1700 round number hurdle, which was briefly reached on the 9th of March. On a bearish front, and if the market moves lower, the first level that could be tested is the S1 1568. Lower is the S2 1520 line, and finally the S3 1467 barrier, which marked the lowest level for gold in 2020. Please note, in our view, the precious metal has broken out of the sideways motion it was trading between our S1 1568 and our S3 1467 and has moved in a bullish momentum. The RSI indicator below our chart, which is just below the 70 level, may be implying that the metal still has room to go. We hope that you may have found something useful in this report which you can use for your trading. From all of us here at IronFX, best wishes for solid trading.